Welcome to Trading Lounge and the money management for Forex and indices. So Forex and indices are a little bit different from shares as they're in contracts. So we're going to use this fantastic little system, method, plan. I like the idea of plan in this particular instance. So what we're going to do is we're going to look at the Forex here, and we've clicked on Forex and we're going to add here. Okay, so we'll click on the little add button here. We'll give this a title. Let's just look at the AUD USD dollar, and I'm going to put this lot size at 100 here. Don't pay too much attention to that just now, but that will give us a good depth. I just want to show you something. The contract size, if we're looking at minis, well then we can trade, say, one contract. This is the important point here, the delta. I'm going to set the delta at 90, but you can play with the delta, bring it up to 100, bring it down to 50, and so forth. This is the thing that you change. The account size, most people attack Forex with a small account size, so we'll put $5,000 there. They're mostly scalping, so I will put 25 points there, and for the average reward and for your average risk we'll put 13 pips there. Now I also want to say too that there'll be slippage involved. I think it's a really good idea to use a broker that offers you an ECN broker, and I think it's best if you know the brokerage that you're paying rather than the spread. So get a fixed brokerage cost using an ECN provider. So an ECN provider with a fixed brokerage price. So then you know exactly where you are. Okay. So moving on here, so we're just going to save this here. So as I mentioned before, these things are pretty much set. The currency that you're going to be using, the contract size here, your account size. So the only thing that's going to change is your risk reward. This depends on the method or system that trading system that you're using. There'll be an average win price and an average loss price here, and it's the delta that you change. So I'm just going to save that, and once we save it, then we go back up into Forex here, and then we can see that this is populated now. Okay, so our title was the AU, contract size is value is 1 using mini contracts, the delta is 90, the account size, you can re-edit this or delete it, and your average reward, average risk here. So we're going to view this now. So just in viewing this, we've got all our details here. So this is a fixed ratio money management method, and we can see that few details in here. But what I want to sort of bring to our attention here is that we're starting with one lot size. Our delta is 90, and we've got our account size at 5,000. Okay, so in this case, if we want to add another contract to a lot size of 2 contracts or 3 contracts and 4 contracts and 5 contracts, we have to increase it by a delta of 90 here, so it'd be 5,090. So you would work through when your account size might be up at 5,540. If your account size drops back down, well then you need to be trading 3 contracts. So basically you're working through at each level here. Okay, so yeah, you might be at level 7 here, and you keep working through, and these are profits needed to add another contract in percentage terms, and same with here. The risk per dollar trades here, the reward here, and the risk here. This is what I want to talk out here. So we can basically see that when we're moving down through here, our pip risk is going from 0.3 to 0.5 to 0.79, 1 point. So it's moving along here a little. I should just bring this in here. Sorry about that. Can I bring that in? Okay, hopefully we can see that there. So the thing is you can see that the risk is increasing here in pips here, and you'll get to a point here where you'll start to see that it diminishes from this point. So it goes, we have a high of 1.4 here, and that's at number 14 here. And then from that point, the risk starts to go down here, but yet we're trading more contracts over here. So we're trading more contracts, but as we progress, we're risking less and less per trade in here, as you can see scrolling down through to here. So you can be trading these large numbers here at 82 K here, and we're looking at risking 0.7 here. So this is the beauty of this. So if you move up a level, then you move up a level and you add another contract. If your account drops back down, well, then you trade that amount of contracts. So your job each time really is to get to the next level, and this is what this particular fixed ratio does. And this will be the same for indices as well. So from the Forex that were here, you can do the same with the indices. I won't need to go over the indices, because in a way they're trading, if you're trading a contract size, they can be $1 per point. So this could be the the Australian CFD on the XJO or on this over the SPY, and you'll have a contract value of 1 there. But this, you can adjust these when you're filling them out. But there you go. So it's very simple, and it just gives you a nice plan, a nice money management plan. And this way, this is the quickest way to grow the account, but also risking less as time goes on and as contracts build. So it's a fantastic method, and have a look at it and see if you can get your head around it. We're here to help if you need help. Cheers.